Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, October 20th, 2020. It's about, well, it's exactly 2:50 Eastern Time as I'm starting the video, and we're going to do something a little bit different in this video. As I mentioned earlier today, I'm behind on getting back to gold members. Part of the perk of a gold membership is in the trading room. You can ask my opinion or anybody else's, for a second opinion on a stock, a trade idea, anything like that. And for a while now, I'm on week 7 COVID. The symptoms are mostly manageable through the day. Thank goodness to ibuprofen. I guess what I'm assuming is majority of my symptoms are brought on by inflammation. Pop a couple Motrin, I can function without the Motrins. Off that for a while, everything comes back: fever, aches, pains, sweats, chills. You got it, all the good stuff. Hopefully that'll be over soon. Eventually it will. Typical COVID symptoms last anywhere from 5 days to 2 weeks for most people, and I have what they call long COVID, where those symptoms can last months or more. Anywho, so getting back to what I'm going to do here is follow up on requests from gold members on chart opinion. So we're going to go through these, and I'm going to look at each of the stocks. I've just gone back as far as I could this week, and we have about little more than about 24 different stocks here and a couple ETFs. Now the benefit of this is twofold. Number one, first of all, I can get out, I can go over 24 charts much more efficiently and faster by doing it in video format. I'm going to cover 2 different time frames on each stock. That's how I like to analyze a stock. If somebody asks me, is a swing trade or an investment candidate, what do you think of XYZ? Well, I start out with the daily charts, and if I see something I like there or don't like, whether it's bullish or bearish, or I don't see anything, I'm going to look at the weekly chart as well. And even if I see something that does look good on the daily, I want to confirm that on the weekly chart. If it's a trade that I think is maybe ready to be pull the trigger on, in other words, there's an objective entry at the time, I might also jump down to a 60-minute time frame to kind of hone in on the timing for that entry and exit. In other words, look for a trend line or horizontal price support level on the 60-minute chart. So, all right, we're going to start out here with CXW, and this is Core Civic. It's a REIT. You can see in the middle of the chart, usually with the symbol and the company and what they're in. And okay, here's my thoughts on that. You can see that I've drawn a downtrend line. This is probably the most important line right now. And also the fact that when you look at this chart, you can see here, we're going back to 2018. This is a stock in a downtrend. Unmistakable, no two ways about it. You cannot argue. Here's a stock in a downtrend line. So I say that, and this is going to be a common theme in a lot of these stocks we're coming up on. Keep in mind that bullish chart patterns and bullish developments tend to have a higher failure rate. They have a higher rate of either not breaking out or if they do break out, proving to be either a whipsaw signal. In other words, for example, break out of the trend line and maybe you hit that first resistance and then take the next leg down. Or if they do break out, you typically go about to the low end of what that pattern would project. Here's a bullish falling wedge pattern within a downtrend, right? Widest part of the wedge is right here, and that's about what we played out to, and then the downtrend resumed. In other words, in a bull market, you get a bullish falling wedge after a correction, and usually that's the spark, on the way to new highs and beyond. And so always take a look at the bigger picture, and if you identify a potential bullish or bearish chart pattern, put it in the larger context of things. So here's a stock clearly, and I'll roll back a ways all the way to 2017, clearly in a bear market. Therefore, you take it with a grain of salt. Now, put a stock or a security in a bear market and give me a long setup, and I'll take it if it looks good. This one, for example, if you took that breakout above that bullish falling wedge right there, it wasn't much, but it was about a 16% run in just over a week or so. I'll take a 1 week, 15-16% on a trade all day long. So that's something to note right there. So there it is. There's your downtrend line, and just like back then, you have bullish divergence. So this would be indicative of a potential bear market rally setting up. This is not at what I call an actionable trade, it's a trade setup. An actionable trade would be if I found this stock, let's say a week from now, and it just broken out, I would highlight that if it hadn't gone too far as an actionable trade. So you can see first target would be 851. Now keep in mind, if and when it breaks out, that may or may not be enough meat on the bone. Well, yeah, about 6.5% if you get in early enough. But that's a pretty big level. You can see it's been, it was support and now it is resistance. So if the stock breaks out, first objective long entry is a breakout above the downtrend line. Second objective long entry, first target and second objective long entry on a break above 851. And these are all additional potential targets. So there's the case to be made for a setup, not an actionable trade at this point in time. When I jump over to the weekly chart, it doesn't look so hot. Here's a stock again, like I just showed you. Actually, it's all the way back to 2015. This stock peaked in 2015. And like many stocks out there, guys, this is a a market, a stock market that's near all-time highs, but there are many stocks that are in multi-year bear markets, and this is one of them right here. And based on this weekly chart, I don't see a whole lot that stands out. I can give you some RSI divergence right there, and sometimes that's all it takes, divergence on one of the indicators. Ideally, if you get it on both, but I don't have any PPO divergence. But what you do have is you're coming off some oversold readings, but again, keep in mind that oversold readings in a bear market are pretty common. Oversold tends to become more oversold or stay oversold. So you see these persistent oversold readings in a bear market. In a bull market, it's common to become overbought quite often or exceed that overbought reading, and you don't see many oversold readings in a bull market, right? In the bear market, that bull run right here, no oversold readings on the weekly RSI. Finally got one here, right there, and then you put in divergence, and the bottom was in right there. I would also add, do a little due diligence if you're looking at this, especially for a trend or a longer term swing trade or an investment. I don't know, REITs, when you see REITs here, all REITs aren't created equal. They are many different REITs in many different sectors and industries. Some of those industries will flourish at sometimes even during a recession. For example, you might have healthcare REITs, hospital REITs. They're still going during a recession, and then you might have like business, REITs that rent out office space and things like that might take it on the chin in a recession. So know your REITs, know your companies, and now let's move on, do the rest of these a little faster. As I said, I have about 2 dozen to go. Our next one up, REV, Revlon Inc. Same story. This stock has been in a bear market. This is, you all know Revlon, or most of you do. That one's topped back here all the way back in 2015. So again, common theme. These are, a lot of companies that have been around for many years, Revlon of course, and in a bear trend. So you have to first and foremost recognize that. So at this point in time, I don't see any evidence that the bear market in Revlon is over. So at best, you're looking for a bear market rally. Here's a downtrend line. It's been violated once right here, a little pop above it, but other than that, it's pretty decent fit, so I think it's valid enough. And you also have price resistance at 615, which should come in together. So if the stock can reverse, now again, I cannot say this enough, it is in a downtrend, 0 buy signals, no buy signals at all. And these lines that I have right now are just potential divergence lines as PPO is pointing lower. So therefore, if Revlon continues lower, anytime soon it's still going to have positive divergence, so we might just drag that line down there, and maybe it then reverses and confirms that divergence. And if it did down here and you had a buy signal other than a trend line break, maybe a bearish or bullish engulfing candlestick, or a 2-3 bullish, 3 consecutive candles that make up a bullish reversal pattern, and you're low enough, then you might target that trend line and or that 615 level. If we break above the trend line in 615, targets are 689, 684, and again from there, we'll have to see where the market's going, and these are other potential targets. But right now, again, the stock's in a downtrend without any buy signals, so I can't give you any of these upper targets with any degree of confidence. And we look at the weekly chart. This is not a pretty chart. Here's a stock. Think about what's happened with COVID. Revlon, women's products, makeup and all that good stuff. People are working from home, staying at home a lot more, so therefore, some people may not shower every day using less shampoo. Obviously, a lot of women, if they're not on Zoom calls, aren't going to be putting on the makeup, if you're working from home. So, rightfully so, Revlon sales are down. I would assume from that fundamental perspective. I don't know. I haven't looked into the company at all. All I can tell you is this chart doesn't look pretty. Yeah, there's a little bit of RSI potential divergence there, and you're getting oversold, and you were oversold here. So this one's due a bear market rally sooner than later, but this chart looks like death. I cannot make a strong case to jump in, and I certainly cannot make a solid case that the bear market in Revlon is over. Doesn't mean it's not over or won't end today, tomorrow, next week. I'm just saying there's nothing or very little, if anything, in this chart that I see that says, hey, the worst is over for Revlon. But again, tactical trade, jump in, to trade the breakout. Bear market rallies are I love trading them. They're very powerful. You get short covering mixed in with the buying, and there was a 72% rally right there in the bear market rally. Here's a bear market rally right there. Lasted just about 2 months, a little over 100% rally. So, I'll trade those bear market rallies all day. Here's one that was telegraphed also in advance with positive divergence right there and a nice clean downtrend line. So this is a bigger wedge. There was a wedge right there. So let's say you took the breakout there. You had about an 84% gain before that bear market rally was over. So by the way, this one was also telegraphed. You got it. Positive divergence. There it is. So similar setup now. We just need the catalyst, the buy signal, and we don't have that yet. STNG, Scorpio Tankers, that's energy sector, oil and gas midstream. So what do we have here? You can see the lines, similar story. Here's the best downtrend line. I put question marks by it. Why? Because I only have 2 reaction. Well, almost 3 there. Yeah, we call it 3 reactions. So minimal downtrend line. There's some price resistance right here. So if we can pop that trend line, here's your target. Let's just say right now, let's just say that 1380 target, pretty significant resistance. So if the stock were to pop up there from where it's at now, that's about a 31% rally, and I think that's certainly an objective place to book profits. But again, no buy signal. It's still in a downtrend. Positive divergence building, just like you had positive divergence here at this low. From there, that stock rally. These shippers can run. Let me tell you, trade them for years. 174% off that divergent low. But bigger picture is it's in a bear market too. So those are bear market rallies. And you look at STNG on this weekly chart, and you can see it trades well to the technicals. We've traded this stock over the years. It's been a while, but I used to post to shippers a lot. We had a lot of trades in these things over the years. Haven't traded this one in a while, but you can see the lines that make it up. And the 200-day, I've noted the 200-day EMA. That's this red line here. We're on a weekly chart, so you're going to see it listed as a 40-period EMA. A 40-period EMA on a weekly chart is the same moving average as a 200-day moving average or 200-period moving average on a daily chart, because there are 5 days in a week. 5 times 40 equals 200. So the line's going to come in at the same level. And what I'm showing you here is you can see in a bear trend, it acts as resistance. When we broke above it here, this was an excellent buy signal. You had not only a breakout above the well-defined downtrend line that I showed you there, but also above that 40-week moving average, 200-day moving average, with a big green candle to boot. That set up this uptrend. We back tested the 200-day right there, and we had a nice rally from there. I mean, the stock rallied before all is said and done about 76%, and then it had a beautiful uptrend line right there. Negative divergence telling you if you were long trading that bear market rally, hey, it's probably coming to an end soon, and that told you if you didn't get out yet, get out. There's a breakdown of the trend line and the 40-week. So there's where we're at now. Now, one thing this stock has going for it, it's way below the 40-week, and usually when you get, think of it like a rubber band. When these stocks get too far away from a key moving average like the 40-week, like it did right here, boom, you usually snap back and revisit or recheck that trend line. You hit it, you were rejected, we're well below it now, so that would also be a target for you as a swinger or trend trader. That 40-week or 200-day, you can see it here as well. That's the blue. You probably can't see it in the, here, let me turn it up a little bit. I have these lines kind of turned down so they don't cloud the chart too much, but there it is right there with the 200-day simple moving average just above it. So there's your bounce target range if and when we get a buy signal on STNG. HSBC, another one clearly entrenched in a bear market. No mistake in that. Nobody's going to argue that. This one's been moving down for quite a while. Positive divergence here on the PPO. We don't have it on the RSI, but what we do have on the RSI are we're coming off extreme oversold readings right there. Last time we were that oversold was right here. We got a bounce. Like before that, we were right here. In fact, just about every oversold reading usually gives you a bounce off this stock. But again, these are bear market rallies, and they're just telling you, look, if you're shorting the stock and you get oversold, maybe it's time to tighten your stops or take profits. Or if you're trying to play a bear market rally, you want to put the odds in your favor, line up, look for oversold conditions coupled with a buy signal. So that was oversold. We certainly did bounce. We're kind of in no man's land. The RSI is back to 60, but we have a minor downtrend line here. So if we can pop that downtrend line, this one could go up here. You know me, I'm not so hot on the banks right now, and you have to realize this is a dead bank. It's a zombie bank, like so many out there. Look at this stock. It topped back in 2007, and it's been in a cyclical, larger bear market since. With a secular bear market since then. And these are cyclical bear and bull markets within there, but this thing's just been walking lower, and you can see the trajectory. Is there positive divergence? Yes, we do have on the weekly chart. You can see down below bullish divergence. It's not in itself a buy signal. There's your trend line right there, or something like that. But there's positive divergence, and so yeah. Unless financials take it hard on the chin, probably a bear market rally in this one coming. And did I give you targets? Yeah, that right there, 2282. That's minimum target and a potential target. If we have some kind of really strong rally, max target, I would give it as about $27 right there. CAJ, Canon, yeah, another one. I'm just going through order as I wrote these down, from the request. Another one clearly in a bear market. Yeah, I don't know what Canon, what their product line is today. It was, DSLR, it was SLR cameras, and then, the digital age came and put a big hurt on them. And then they went to the digital SLRs. I think they also did more of the copiers. But again, I'm not very familiar with Canon as a company. And it's these are ADS, that means American Depository Shares. So what happens is if you own this stock, you're going to see this is a 60-minute chart. It's going to gap up or down every day. Why is that? Well, because the main shares are trading in the country of origin. These are the shares listed in the U.S. So every day when it opens up, depending on what it did overnight, you're going to have a gap. So you need to be aware of that if you're trading this one, especially in using stops, because it's going to gap up and down every single day just about when it opens. There's positive divergence continues to build, strong divergence. So I would think based on this chart, it looks like the odds for a bear market rally are increasing, and it could be pretty substantial. Targets, I'm going to give you a couple potential levels there, and let's just leave it at those two now. That'd be a nice run, about 16 and 23%. But again, bigger picture, here's a company in decline, a company that peaked back in 2007 and has been in a secular bear market since, just moving lower, and well below this. That stock is back to where it was back in the late 90s now, and and I look at this chart, yeah, positive divergence on the RSI, and that may come into play. We don't have bullish divergence on the PPO, but we have a pending PPO crossover. So I think sooner or later we get a bear market rally, unless we have a big correction in the stock market. That's not going to help this one, certainly. And again, in a downtrend, needs to pop the downtrend line to get a buy signal or some type of candlestick reversal pattern. All right, next up, OIH. This is the oil service sector ETF, or one of them. And, this is a dead, dying industry. fossil fuels. And this is pretty much resistance up here at 147 and support here about 91. So we're close to support. A case can be made to go long at support, or on a break below this this uptrend line. You do have some minor resistance in between, so it's not one of my favorites. When I look at this chart, I'm more apt to fry other fish right now than this one, but there's a trade to be made. That's going to be resistance right here. It's 111. Let me just round that off, make that very clear. That would be your first target if we get a bounce. It's pretty good resistance too. Why? You have reaction here. Let me try to use my circle tool. Reactions there. Big old gap, another reaction. So certainly T1 or R1, resistance 1, after the trend line, that is. And then if it can take that level out, 147. If it breaks below there, well, there's not a whole lot of support. You come in down to that recent low right there. And again, if you're trading bear market rallies in a sector or stock or ETF like this that's in a downtrend, and again, make no mistake about it, this thing's been moving lower since 2014. That's every bit of bear market. Put the odds in your favor. If you can get these weekly, deeply oversold readings on the weekly chart, we've had 1, 2, 3. Great. That's where the rallies come from, off those levels, bear market rallies. And we had one there, but the problem is we already had it. And look at where we rallied back to. This is that 40-week moving average. That has capped all the kickback rallies for a while now, and it was support back here. And we broke below it, and other than a few whipsaws here, it does a pretty good job of defining the trend. We're below the trend. So bottom line is that was the best, or the last time to step in with one of those deeply oversold readings. Trend indicators are all in bearish territory. Just again, ugly looking chart. Bear market rallies are powerful, so I gave you levels to trade. And I'm highlighting these once again, not as my favorite picks, but just response to gold members asking for chart opinions on these. GT, Goodyear Tire and Rubber. Well, here it is, stuck between a range. They got hot water recently, supporting Black Lives Matters while condoning Blue Lives Matter and everything else, which was just downright stupid. Every police car I ever see driving around has Goodyear tires on it. But anyways, there it is. It's in a trading range. That you cannot argue. Look at all these reactions up here. 1, 2. Well, we had one back there. We broke into it here. So bearish if we get rejected. A case can be made for an objective short entry up around the top of that trading range, which is a 1042. If it breaks the trading range, it may not run because you have a longer term downtrend line coming into play. So while normally I might say, hey, an objective long and a break, I think you'd probably get checked on that downtrend line. It would prove to be a false breakout. You'd put in negative divergence on that breakout, and it would probably send you back down to the bottom of the range. So I'm going to say this one's a short here at 1042. And or maybe a partial position and a full position on a breakout if at that trend line with a stop somewhat above the trend line for a swing trade all the way down to at least that 728 level, again the bottom of the recent trading range. And when I flip over to the weekly chart, which I just did, you can see here's that 200-day and 40-week moving average capping all advances so far. So we're up against that, as well as some price resistance there on the weekly chart. PPO indicator remains in bearish territory below this zero line. So look, solid break up there, bullish, nothing but bullish. If you get a solid break above there and the PPO flips back above there, gets back into bullish territory. But until then, the trend is bearish. So rejection here is probably going to take this one down for another leg down, that is. Next up is TWI, Titan International. Looks like industrial sectors, farm and heavy construction machinery. It was would have been asked my opinion on this one back here. You had a nice bullish falling wedge, beautiful bullish falling wedge pattern, confirmed with positive divergence, and boom, breakout. And since then, that thing rallied from the breakout point. 214%. My opinion, most of the meat on the bone on that trade's been milked. This is big resistance up here about 393. It hasn't hit that level yet, but it came too close to it. Then we had a minor trend line here. It just broke. So would I short it here? No, I would have preferred and still would see a push up to 393, and the charts confirming with other things such as divergence and whatnot. Kind of in no man's land for me. What I mean by that, it's below resistance, and I really don't have much support below. I have a minor support level right here, and it's kind of smack between those two levels. So I don't see an actionable trade on it. There's the levels if you want to trade it. Weekly chart, another one, like so many, in a downtrend. This thing peaked back like a lot of stocks in the last bear market, and it's been moving lower since. There's a weekly downtrend line right there. Hey, if it can break it, bullish. But so far, it's run into that downtrend line. It's been struggling with it. We did have positive divergence on the RSI. If it can break that and you're looking for more upside on this stock, previous reaction high there, and maybe a move all the way up here to that 689 level. But again, right now I can't make a case to jump in, or long or short. And somebody in the trading room asked about the Joe trade. It's an unofficial trade. Last one was official, but this one we're pulled back to this was R1 resistance back then, and it's now support. So on the daily we're at support. On the 60-minute chart, we still have divergence. I mentioned recently on both coffee futures, KC, as well as JO, any new low other than that previous low would still be a divergent low. So I made a reply in the trading room today. Look, I'm giving my position. I have KC just a little more room, but really not much more below today's lows. We have positive divergence because we made a slightly lower low, a marginal new low, and as I said it would do before, that marginal new low has extended the bullish divergence we had in place before. We had bullish divergence here, we broke out, hit that first target 33.92, pulled back, and we pulled back to support too on JO. 31.47 is a level I've had here for a while, and so again, it's really pushing the limits, and maybe an uptrend line right here. You really want to look at KC2 coffee futures when trading this one, and you can see there's that marginal slightly lower low, potential divergence. PPO looks like it's starting to curl up, although it still ain't headed down. And again, if we can turn up here, great. There's a potential for this one to run. If it goes much lower, I'd say let it go. ATVI, this is Activision Blizzard, big gaming company. Simple stuff. Divergent high, correction, divergent high, correction, divergent low, rally, divergent high, correction, divergent high. And not just the divergence, the trend lines, and you can see the trend line breaks. Here was our uptrend line, there was our divergence line, negative divergence I'm referring to. Breakdown, and we've been moving lower. That was also a false breakout or a failed breakout attempt to new all-time highs right there, because we broke above that previous high, immediately failed it, tried to rally up again, failed at that level. It's about 84.50, and we're below it. So that puts the stock in a bearish technical posture. Is the correction over? Possibly, but I don't think so based on the scope of this wedge, based on the scope of the previous drops off these divergent highs. I'd say this one's got more to go. That's a rough target down there, that 80 or 68.12. We already hit this level once, so if 78.58 goes, that should open the door to 58.12 and quite possibly 61.73. That's where I think that's where I'd be looking to cover a short if it gets down that low, because I think we'd have a tradable bounce off that level if we get. Here's a quick glance of it on the longer term weekly chart. We had a primary uptrend line right there, big negative divergence heading into the highs in what was that, 2018, followed by a big drop. These kind of stocks can move. That was a 54% drop. Here's a potential uptrend line, which would also be a longer term target if we pull back. Remember, we failed so far. We're not too far off it, but we did fail the attempt to break out to new highs. If we can't power up through there soon, then and we do move to the downside, I would also use this as a potential target, this uptrend line here on the weekly chart. I can't give you a number because trend lines are dynamic. That means every day they come in at a higher and higher level. So it depends on if and when we get there as to what that particular numerical value is. And again, you'd want to, of course, align things with what's going on here on the daily chart. Zoom, 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 ZM. Somebody asked about Zoom, or actually maybe a couple inquiries in the trading room. This one's just gone, ballistic since COVID, rightfully so. Personally, I've never used it. The only video conferencing I've done is a few teleconferences with my doctor because I have COVID. I can't go in the office; they won't see you. So they do the teleconference calls, and that's not through Zoom. My kids use Zoom for school. My wife uses it for business. The thing is, and I've said this before, they're not the first and only one with video conferencing. Microsoft's had Skype and other services. I have to imagine the competition has them in the crosshairs, and God forbid COVID all of a sudden dissipates sometime soon in the next year or so, becomes a non-issue with the vaccine or better treatments. People start going back to the office. A lot of hot air to come out of this one. There's your divergence, negative divergence forming. No sell signals yet, but here's a minor trend line, this one right here. And what I have is this is the primary uptrend line I had. We had a breakdown and a back test right there, and you can see again negative divergence. This is a secondary trend line that I have right here. First support or target 457.43, then 344.81, and then 277.63. That would be this one you probably get a reaction as well, and there's a gap. It maybe goes to the bottom of the gap there, about 329.75. But if we get down there, that's probably a good place to cover anywhere. Certainly if we get to 243.31, those would be pretty big drops. But again, it's if a corrective wave, it would only be a small retracement of the entire move up, and that'd still be a 50% drop. And I do think that's quite likely in the coming months here. Just need to get that sell signal and break the momentum. Once you break the momentum in a trade like this, it starts to go the other way. That's where everyone starts jumping out, just like that DKNY or DKNG short trade we had. It was a big momentum stock, and then boom, the momentum broke, and goes the other way. Everyone starts selling. So we need to see that with Zoom. Unfortunately, Zoom hasn't been around a while, so I can't really give you analysis on the weekly chart because this one just came public back in 2019, so we don't have a lot of chart history to go by on the weekly chart. All right, a few more. We're almost done here. ATNM. This is Anthem Healthcare Sector Healthcare Plans. You can see my shaded box for the last few years here, although 2018. This is where the stock is traded in, with the exception, like so many others, we had that V bottom into the COVID lows back in March. But for the most part, here's where the stock's traded. So there's your MO. Be long around the bottom of the range, sell or be short around the top of the range, wash, rinse, repeat, wash, rinse, repeat, wash, rinse, repeat. There's also a downtrend line that you can see I've drawn here as well. Break above the downtrend line could trigger some buying, but again, the problem is just above that is the top of the recent trading range. So any breakout above the downtrend line, is probably going to get checked at one of these other reaction highs. Longer term, bigger picture, if the stock can make a solid breakout above, this is multi-year consolidation, building up energy, that'd be bullish. Otherwise, if it heads down, that's going to be bearish. Elections coming up, it's certainly going to probably impact the healthcare sector. Also with Supreme Court justice getting on there, they're talking about the potential repeal of Obamacare. A lot can happen, so you might want to see which way the political arena goes, as far as healthcare before taking long-term positions in any of these. And but there's your levels to watch. You can trade the technicals. Longer term, you can see it clearly. Here's that boxed-in range right there. This is a stock that's really not going anywhere in the last few years. That won't last forever. Trading ranges usually ultimately break one way or the other. So there it is. There's your upside break bullish, downside break bearish. PTON. Somebody asked a couple inquiries about Peloton. They're kind of, in my opinion, like the Apple of I was about to say Tim Cook. Steve Jobs. Steve Jobs was famous for saying, he had a quote, he never invented anything. He admitted he just made things better. He took the old Sony Walkman cassettes and came up with the iPod. Get rid of all the clunky stuff. He didn't invent the cell phone. He just made it better. Or Apple did. So things like that. And what Peloton did, they made a better bike, and they happened to make it right at the, just before the right time when COVID hit and the gyms shut down and everybody started forking out money for their home gyms and all that. So the thing is, how much of that's been priced in? Since the March lows, this stock has rallied 677%. To say it's overbought would be an understatement. And you can look at the daily chart here and see, here's your overbought readings. I have an extreme, by the way, on that one, 82, just over the 82 level. And you can see every time it's hit that level in the past, it's had substantial, these are double-digit corrections. Don't let the, what seems like a little drop fool you. In a 677% move, those are double-digit drops. And there we are. We just hit it again. But yet we haven't had, the big double-digit corrections that we had then. Here's your minor uptrend line. This one clearly will offer an objective short entry on a break of this trend line. In fact, I'm going to set an alert right now. And my target would be the next uptrend line, but I'm also going to give you a horizontal price target. They're probably going to come in together. There's the primary uptrend line. Price support about 98.70, and that would constitute a drop, again depending on when the trend line breaks down, and when we hit that, about a 24% drop. So there's my target on Peloton. You're also going to get, when it happens, and I think it'll happen soon, you'll get a bearish crossover on the PPO as well, to help confirm that, just like you had back here somewhere in there. And we're not going to look at the weekly chart because, again, this is a stock that just came public in 2019, so we don't have the history to bother with a weekly chart. MCD, McDonald's, somebody asked about, and clear pattern. Goes, it's been in a bull market for a while here. Uptrend lines, you get these divergent highs, break the uptrend line, you get corrections, tradable corrections. Little bearish rising wedge, uptrend line break. There's your sell signal. There's your correction. We've come full circle, rising wedge, negative divergence. There's all your divergence lines, 1, 2, 3 over the last few years, which tells me, even though this one recently broke out to new multi-year or all-time high, tells me when we can break this trend line, that'll be your sell signal. Minimum pullback target 214.30, and quite possibly more. Why quite possibly more? When I flip over to the weekly chart, we can see here these are their previous divergences on the weekly. These are big double-digit corrections, divergent high, correction, divergent high, correction, divergent high, correction. Actually, that was wave one down. Before all is said and done, that's the correction that came from that divergent high right there. And what it's been doing, McDonald's has been building divergences for a while on the weekly chart. So that's why I have DH1, DH2, and this is really now DH or divergent high 3 right here. DH3. Yeah, there we go. Right there. So we need to break the trend line, get the sell signal, and that could open the door to a much larger drop as McDonald's continues to wedge higher in a bull trend, but with some big divergences building, and we're overbought again. And that's the thing too, when you start building divergences, that's what the RSI divergence is about. Each of these overbought readings are lower than the previous ones, or at least that peak, that one, and that one. And it just shows momentum is waning in the bull trend. So when it breaks, I think this one's probably going to come back ultimately, before all said and done, at least to that 153.63 level. But just like some of those potentially bullish setups, yet no sell signals as of now. It's in an uptrend, so you just have to wait for the sell signal. Tesla, I believe they report tomorrow after the market closes. This is the best trend line I can fit. I've had this one on my daily chart for a while right there. It's not my favorite because there's a few violations and not a ton of tags. Quite recently there were. It's cracked that trend line. Remember, before earnings, take everything breakouts and breakdowns with a grain of salt, because earnings can and often will change that. But you look at the weekly chart. Here's a stock that to say it's undervalued, I think, is an understatement. There's your P ratio, if that's correct, 521. So, yeah, Tesla's going to have to sell a lot of cars to catch up to grow into its P ratio. So, there it is. Here's your primary uptrend line on the weekly chart. We're cracking below it. That's comparable to the trend line I gave you on the daily. So we're below trend. Big negative divergence, and that tells me that no matter what happens immediately after earnings, whether we pop or drop, ultimately in the coming weeks, I think Tesla's going to let out a lot of that hot air. Targets would be about 283 and then 202, give or take, right there. Those are your longer term swing targets for Tesla. Again, that was a daily chart, and I've covered it quite a bit on the 60-minute chart. There's the split, which I'm viewing as a buying climax, the split and the buying afterwards, and every attempt so far to get back into that range has been met with selling, and we've taken out the trend lines here on the 60-minute chart. We're moving lower, but again, earnings coming up. You want to take a gamble, you can take a position long or short ahead of earnings. Otherwise, wait and see what happens after, and we'll see if we can get an objective entry on this one. Oh, and if things happen quick, which they often do on a stock like this after earnings, big support down here about 333. What does that mean? If this stock plunges on earnings, whether it's after hours tomorrow night or Thursday morning, and you can buy it around 333, I think you'll get a bounce off there. Buy it, of course, put a stop somewhat below. And remember, in earnings, everything is volatile, and you may overshoot that level. So if you overshot the level and then you see it recover 333, that's your objective long entry right there. Again, at least for a bounce trade, that's what, quick bounce trade off that level. And that is it. Long video. If you are a gold member and you've posted, asked for my opinion on another stock, I haven't gotten back that far. As I said, as I'm coming back online here slowly but surely from COVID, spending a little more time in front of my desk each day, I will make an effort to try to stay on top of those trading room requests. When time permitting, I'll post a chart with some targets and notes. On the stock if I can, but these 24 or so stocks I just covered, it would have, as long as this video is taken about 40 minutes, it would have taken me hours to mark up all those charts on 2 different time frames, daily and weekly, daily and weekly, as well as try to communicate everything that I'm seeing in the charts. So hopefully you found this useful, and I'll continue to do my best to get back to any questions from the site, as well as the any emails coming through on the support page. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.